afternoon, everybody. Thank you for joining us today. This is the first in our four-part business basics series, so thank you for joining us. All right, so just very briefly, this is our building business fact team. It's comprised of three different individuals: our director of operations, Paul Farmer, program manager, Jesus Kukia, and myself, Jose Barajas, and program analyst. As you can see, all of our staff is fully bilingual in English and Spanish, with the end goal of serving the diverse linguistic needs of our community. With that being said, this is going to be our agenda for today. We're going to touch very briefly on what the Building Business Back program does. We're going to delve into the intricacies of taxes and bookkeeping with our partners over at Platinum Tax, Payroll, and Bookkeeping. And we're going to have some time for questions and answers at the end of this presentation. Awesome. So just very briefly, what's Building Business Back? Building Business Back is a program of the County of Monterey in collaboration with the Monterey County Business Council. So what does this mean exactly? At the onset of the pandemic, the county received over $84 million in American Investment Act monies. And of those 84 millions, the County of Monterey was the only county in the entire state that decided to allocate some of that funding to creating a program that's going to help businesses access pandemic-related resources, such as PPP, EIDL, and other programs. That being said, the County of Monterey did give a special mandate to target historically underserved communities in the county. That being said, those communities are defined as those that are operating in unincorporated areas of the county, as well as those that are owned by women, minorities, and the LGBTQ+ community. So our program does take special initiatives to help support these diverse communities. Our program serves three main functions. First and foremost, we're an information hub. As a business owner or entrepreneur, it can be difficult to find different resources, try to understand them. So we created a centralized point, that being our website at montereycountybusiness.com, where businesses can access federal, state, local, and city-specific resources for their business, all of which are completely free. Our team is well versed and updates this website regularly on a bi-monthly basis. So you'll always have the most up-to-date information on what resources are available for you. The second thing we do is we host a variety of free workshops in various locations throughout the county. Today's workshop is also offered in a hybrid format with the end goal, again, making these resources the workshops more accessible. We also offer free live support. We'll come to your business. You can meet with us in person at our office. We also have 4 satellite locations in King City, Soledad, Pajaro, and Monterey. Aside from that, we can also do a Zoom meeting. So there's a variety of different ways to receive assistance. And again, all of our services are completely free. And with that being said, I'll hand it off to our partner over at Platinum Tax Pros.
Thanks, Luis. Hi, everybody. So today we're going to be reviewing taxes and bookkeeping, how they both go together. And my name is Tania Santos, and I am a mother, a daughter, a grandmother, and basically a member of this community. I am an ambitious visionary, just like many of you are. So I feel very connected to you already. I am also an IRS enrolled agent, meaning that I was able to pass a 3-part exam that allows me to represent businesses and individuals before the IRS. So, you know, when you're already in trouble, I'm there to help you rescue you from a possible error that you may have made. Oh, thank you for it. So we're going to cover different topics when it comes to bookkeeping and taxes. And I would like to make this presentation very interactive. If you have questions, please raise your hand, and I will make sure to stop and bring that question into our conversation, because I know that many times when someone has a question, it might not just be that one person, but more, and that can help answer multiple people's person's questions. I know also we're probably gonna have questions from the chat, so same thing with the chat. So what are the benefits of having your books in order? So first, it's a requirement by the IRS. It's not just because we want to. So the moment you decide to start operating a business in the United States, you have to know whether you are a sole proprietor or a big corporation. It is a requirement by the IRS to have your books in order. So it's not just if we want to do it, but we have to do it. It makes your tax preparation a lot easier. Many times, I should say every year. In fact, today, we only have about 2 weeks for the tax season to close. And we received so many calls today in our practice because people want to file taxes and we specialize in business, but they don't have their books in order. So unfortunately, we have to decline services because there's just no way that we will be able to put their books in order in 2 weeks. So if you have your books in order, it's going to be so easy for you and for your tax professional to file taxes. It prepares you for an audit. So same thing, not just filing your taxes, but let's say if you receive an audit letter and it says, hey, we want to look at your repairs and maintenance receipts. You right here on your tax return, you're telling us that you spent $16,000 on repairs and maintenance of your business. Show us the proof. So if you pull a box of like a toolbox full of receipts, that's not what the IRS wants. They want to see first a report, which would be your profit and loss, backed by a report just for your repairs and maintenance. And then for each transaction, they want to see proof that you spent that money. So that's how important it is to have your books in order. It prepares you for an audit. And it helps you make informed decisions as well. So a lot of people at the end of the year, and this, I don't want to say that this is a myth, but it almost is. At the end of the year, a lot of people run to buy cars because they think, oh, if I buy a car, I'm not gonna pay taxes. So this is an impulsive decision, or this is just something people do because maybe a neighbor or another person just told them, hey, if you buy a car, you're not gonna pay taxes. So this is not an informed decision. This is just a decision you're making because you believe you may be saving on taxes. But once you look at your profit and loss, once you look at your numbers, your bottom line, and you have a discussion with your tax professional, then you can make an informed decision. But if you don't have any numbers ready, if it's already, like right now, it's the beginning of the fourth quarter, we're ending the year. And if you have a business and you don't know where you are, you're not informed, you don't know what to do for the last quarter of the year. So this puts you at a disadvantage, and you might make a decision that is going to either make you pay more taxes, or maybe create a purchase for your business that is not necessary, and it might put you into debt, which we will talk about debt in another workshop. Okay. So now we're going to talk about taxes. Once more, it is a requirement by the IRS for businesses to, I like to say, reconcile with the IRS. Once more, whether you are a sole proprietor, meaning that you're not registered with the state, you just put a sign on your door and you started selling donuts or anything, that already makes you a business. And so the IRS is expecting you to report the sales, the expenses, the costs on a Schedule C if you are a small business owner, or on other forms if you are another type of entity. Your profit and loss, your taxes might be required for finance events. For example, if you are a business and you are, it's going well, and now you have some savings, and now you want to purchase a home, because we all want to purchase a home, right? It might be required for you to show your personal or business income tax, or both. And they have to make sense, because You can't show some numbers in your business and then not reconcile that with your personal tax return, especially if you have an S corporation, you know, it has to make sense. So that's just one example, purchasing a home. But if business is going really well and you may want to purchase a commercial building, you will definitely be required to show your tax return to the bank. Any questions so far? No? Okay. And the last thing is you can plan your taxes. So yes, we understand that we have to file and pay taxes every year, but you can plan them. You don't have to just wait until the end of the year, or don't just wait until April 15 to call your tax professional, or September 30th or October 2nd, like today, to find out how much you have to pay. You can plan for it. Again, if you partner up with a tax professional, you can definitely save a lot of taxes just by planning a year ahead, a year and 2 years and 3 years ahead. You can definitely do that. There are many ways to plan for it. So tax time is not only April 15th. Tax time is every single day. Why? Because every day we go to work, we earn money, that money is going to be taxed. Every day we make sales in our businesses. Every day we have expenses, and we have to account for all of those costs. You know, if I sell sandwiches, I'm buying the bread, the ham, the mayo. So all of those are what they call tax write-offs. So there's definitely a way to plan for all of those things ahead of time. Oops, I think I jumped on it. Yeah, sorry. Okay. So why is it important to keep my documents? So let's assume that we're about to file taxes, and who doesn't receive, you know, you start receiving a bunch of documents in February. You don't even receive them in January, not even your W-2. It's more like in February. Why? That is because when the year ends, most companies, employers, and basically just, you know, the entities that have to issue these forms, they have until January 30th to file a lot of these forms. Some may even have until March or further months. So once we start receiving all of those forms, it's very important to keep them because they can help us identify income streams. For example, earlier someone was asking me about some income that if it was required to be reported. And there's something right now called the gig economy. The gig economy is Uber, Lyft, what's this other one? Uber Eats or DoorDash. That's the gig economy means that you don't work for that company, but you might be doing some contractual work with them. So what's going to happen is that most of these companies will issue you a form stating how much money was paid to you. If it was more than $600, they will definitely issue a form, 1099 ADC. If you're receiving payments with credit card, you will receive form 1099K. There's also 1099 miscellaneous if you're receiving like interest or other type of income. So it is important to keep all these forms so that when tax time comes, tax time is every day. when it comes the time that you have to meet with your tax professional, you have those forms available for your professional, and he or she knows where you're getting your money from. Now remember, in businesses, you may have received cash. Nobody's gonna bring you a form for the cash that you receive. It is important that the cash received is reported. And where are you going to record this? On your cash register. Another reason to keep, why it's important to keep documents, it keeps a registry of your expenses. With the technology we have right now, It's very easy to keep track of receipts. I know they fade very easily, but we have a software such as QuickBooks or even just your phone. You know, if you develop a good system, you can keep pictures of your receipts on your phone. You have to develop a system. I don't recommend it, but there's softwares, there's FreshBooks, QuickBooks, Zero, where you can upload the receipts and keep them together with that one transaction. Because remember, I mentioned before, the IRS may come back and say, hey, I want to see receipts for your repairs and maintenance. You open your let's assume you have QuickBooks, your QuickBooks file, and you click on the transaction and your receipt will be right there. So if you can show that you have a very organized chart of accounts and a very organized system for your repairs and maintenance, and I'm just using this account as an example, then it's very likely that they're going to leave you alone and not ask you for any other items. And they'll just say, okay, no changes. We'll just leave it as is. But if they start seeing that you already have, that you're already missing receipts, that maybe you present a total of 10,000 on receipts, but you in reality listed 16,000 on your report, then, you know, there's a doubt right there. There's already, they want to see more. You know, if this person is lying on just this item, what else is this person hiding? So they start digging and digging and digging. Tax preparation backup documents. So your tax professional needs these documents. We need to have it for our own records, for the tax professional records. And it is a requirement that we have it. We don't need all the receipts because the audit will come to the individual. So the individual is the one that needs to prove that they have the receipts. But documents such as W-2s, 1099s, 1098s from the bank, all of that needs to be kept with your tax professional. Copies, not originals. And a piece of advice right here, because it has happened to many of our clients that, in fact, many of our clients that come last minute is because they've been waiting for a tax professional to help them for months. And then they say, okay, if you're not going to be able to help me, then give me my documents back. Surprise, they can't find the documents. So never leave your original documents with any tax office. You only leave copies and you keep all of your originals with you in case that you have to seek the help of a different professional. Once more, it helps prove that the amounts entered in your schedules were the correct amounts. So schedules meaning Schedule C specifically for businesses, because some of these items, I think, well, right here, this is going to identify income, but on this one, it's talking about identifying correct amounts on schedules, such as Schedule C for businesses. This last one shows property basis. So basically, if I have a business, I have a small business, let's say I'm a landscaping business, and I have a cousin that has a truck that I might be able to use in my business. It's a used truck. He wants to sell it to me for, I don't know, for $5,000. But then I go to the DMV and I list it as $2,000 because, you know, I don't want to pay that much taxes to the DMV either. So it is important that we list the real price and that we draft at least a basic contract or sale agreement with my cousin. Even though it's my cousin, but if you want to put that on your taxes, especially if you paid in cash, you need to prove that you in fact purchased it for 5,000. So basis of the property is important to understand and to have proof as well. Okay. Did I jump one? No. Okay. Okay, so what to do and what not to do. So very important, report all income. Just by reporting all income, you're already saving yourself a 20% penalty. So this is one of the red flags for the IRS. The very first thing they will do is review and make sure that you are reporting all of your income. And how do they do this? They look at W-2s, 1099s, and they also might even look at your social media. So if you're what you're driving, if you're going on vacation, where you're going on vacation, what schools your kids go to, what part of town you live. So just depending on your lifestyle, they can tell about how much money you are making. Not only that, but if you are depositing, if you're a small business and you are depositing more than $250,000 in your bank account, they already know. They already have all that information. So if we're putting money in the bank and we're not reporting everything to the IRS, believe me, they already know, and most likely sooner or later you will get a notification from them. So just by reporting all income, you're already saving 20%, 20% penalty, which is the highest penalty they have, 20%. So just imagine if you didn't report 100,000, that's $20,000 already. So any questions? Any stories? No? No scary stories? Okay. Any questions from the chat?
No,
Not yet? Okay. What not to do? What not to do? Guess on numbers. Don't guess. If you, if it's already time for you to file your taxes and you're like, I can't believe this, one more year and I didn't do my books, what am I gonna do? So don't just guess, you know what happened. There are some methods that you can do yourself in order to reconstruct your books. If you don't have a professional helping you, you can try to do the best you can. How can you do this? Once more, what I recommend that you do is if you have a cash register, go back to your cash register and look at the numbers. It's going to take you time because bookkeeping is not just do it in one day. Bookkeeping is every single day. So yes, it's going to take you a long time to reconstruct your books, but that's what you have to do. Go every day. How much did I sell? Week 1, week 2, week 3. So it's 52 weeks of the year. So if you know how to, does everybody know how to use Excel? More or less? But even if you don't, you can just write it down on a piece of paper. Week 1 of the year, week 2 of the year, week 3 of the year. And just focus on one thing at a time. So if you want to reconstruct your income, just go income first. Then my costs. What is my cost? Items that I purchase for resale. Going back to the sandwich example, things that I purchase in order to be able to make those sandwiches. And then your expenses are transactions or items that you're not going to be able to recover. For example, insurance is an expense. Your phone, telephone, car expenses, basically anything that you already paid and you're not going to be able to get it back somehow. And the cost is items that you invest, like the bread, the ham, the mayo. You're making a product. Once you sell it, you're going to recover that cost. So 3 items: income, cost, expenses. So again, what's the other thing you can do? First, income. Then go through your bank statements. And again, this is gonna take you a very long time, but go through your bank statements, and each transaction it means something. It's either an expense or it's either a cost. So you label it what it is. There might be some transactions in there that will not affect your income taxes, and you just ignore those. Now, I'm saying this if you are a small business, a very small business, family-owned business that maybe gross is about $250,000. If you are a larger business that brings in like $1 million, $2 million, you need the help of a professional. You might be able to do it on your own, but it's going to be very, very, very hard, time consuming, and it's just going to be a headache, and it's very possible that you might be doing it wrong. So don't guess, seek the help of a professional, or come to workshops like this one. Questions? Anyone? Okay. So what if I made a mistake? What if I already filed my tax? Because I see some of you are scared. You probably already filed it and it was wrong. So what if I already made a mistake? The best thing to do is go back, do your books or redo your books, and file an amendment. That is the correct thing to do. And that is what you should do. And that will bring you calm, and it'll bring you tranquility, and you're not going to be all worried, thinking, oh my God, I think I put like $20,000 there and I was just guessing, and now I'm scared they're going to come back and they're going to find me. Or if you believe that you made a mistake, take the time to reconstruct your books and file your taxes again. How many of you have businesses here? Show hands. But we're in California. It's your business too. So it's a good thing that you mentioned that, because remember, we're in California. So a lot of things are different here. California is, if not one of the most complicated state to have a business in, and the most expensive. So now I'm not saying go anywhere. Stay here, stay in California. But there's quite a few laws that involve marriages. So even if it's just your husband, it's still kind of yours. Yeah. Do you do the books? Or so I do the books for them. For both of them. Oh, okay. Oh, that's great. That's great. Any questions about partnership? With receipts, they both like divide and share and do a separate book for his other partner for his, and my husband have his own receipts. Because usually they go and they pay like half, and then they get one receipt. So I don't know how to distribute that between taxes for the K1. Okay. Well, the correct thing to do is they don't have to see it that way. They have to see it. A partnership doesn't mean that each one is going to have their own expenses. It's just the partnership is like, it's one entity. Yes, they are the members, but basically, as individuals, they don't have to pay for anything. The partnership has to pay for everything. So they need to reanalyze how they're doing things, and basically out of their pocket, no money should be coming out of their pocket. Now, how they pay themselves, it's got to come from the partnership. And maybe one worked more than the other one this week for any reason. So let's say at the end of the week, they say, okay, well, this week you get paid 1,000 and you only get paid 500 for whatever reason. Those payments, that money that is coming out of the partnership account, is called a warranted payments. So when tax time comes, those warranted payments, if recorded on books, so you definitely have QuickBooks, correct? Yes. Okay. So those warranty payments will be showing on the K1, along with the losses or the profits from the partnership. So they need to stop doing it that way. Like they shouldn't do half and half or things like that. Basically, all of the money, let's say they have a job. What type of business is it? It's trailer washout for the big rigs. Oh, okay. That's a very good idea. That's a very good idea. By the way, there's a lot of great business ideas. So for those of you that don't have a business yet, start thinking, because you can create a business out of everything, nothing, and you can open a business tomorrow. Anyway, going back to your business. So, whatever invoices that they're invoicing, invoicing, that money needs to go directly into the partnership account. And then, it's going to build up, all that income is going to build up. And then they get a bill from a repair, something that they have to repair. Then the partnership pays. They don't pay anything. To show the trace of the receipt. Exactly. Yes. Not cash. Yes. Yes. Yeah. So I hope that I made it more clear. Yes, because that way, there's not like, oh, hey, I paid more, you paid more, or I owe you, you owe me. No, because right now what they're doing is they're just doing business among the two of them, but they're not letting the partnership do the job. So they need to let the partnership do the job. The intention that they started this partnership. And then at the end of the year, everything's gonna be beautiful. But they just need to record it how it's supposed to be. So that's one example. Oh, give me just a moment. That's one example of, what if I made a mistake? I'm just saying that, you guys can do it better. I'm not saying that you made a mistake. I'm just saying that you can to learn. You guys just need to improve that process, but it's doable. It happens all the time. Most dealing with cash, no cards or anything. Oh, okay. Cash in them. Okay. See if you can call the box in my home invoices. Okay. Yeah. And that's good. I mean, if you don't want to take your money to the bank, that's okay too. But you just have to have a very good system. Okay. Yes. Yes. What is your question? Warranty payments, do you mean payroll? No. No. So warranty payments is something very different than payroll. Warranty payments is just payments, whether it's in cash or check, to the members of the partnership. And those are subject to self-employment tax. But they don't have to be on payroll. No. So LLC partnerships, no payroll for the members or for the partners in this case. For the partners, no payroll. They cannot be on payroll. Have another question? Oh. You can have the question. You sure? No? Okay. Yeah, no. So no, they cannot be on payroll.
So
Yes. Yes.
we have a quick question online.
Yes, of course.
And it's, if you're a sole proprietor business owner, do you still have to file personal taxes, or will filing the business taxes suffice?
Yes. So if you are even if you are an LLC and you are the only member of the LLC, you still need to file your form 1040, which is the personal tax report. And right here, right here, I'm gonna go back a couple of slides. Okay, so right here on this one where it says it helps prove that the amount entered in your schedules were correct, it's referring to Schedule C, which is the personal income tax. So Schedule C, it's only one part of your 1040. That's where you would report your business, your small business, your family business activity in your Schedule C. And that will be filed along with your personal income tax. So I hope I answered that question clearly. But if I didn't, I can repeat it or say it in a different form. So, any more questions? I think this team, this part of the group wants to ask a question. Oh, okay.
Small business will not be filed for export within the initial grace period. That is the current business structure. What are the consequences and steps to fix it?
Well, the consequences is basically when they file the S corporation tax return is going to be rejected by the IRS because basically the election has not been made. That's one consequence. So we're not gonna be able to e-file it. It would have to be sent by mail with, and now here comes the steps to correct it. It needs to be sent with form 2553 And there is a what's it called? A regulation. There's a regulation that needs to be written on it. And I do not remember it right now because it's very long. So, but it's a specialized solution that needs to be done. So if you need help with that, we can help you, because it is a lengthy process, and it could take up to like 3 months for it to get resolved. It is solvable, but it needs to. I would say for this type of items, when you make a mistake or you forget something, I think you should seek the help of a professional. Yeah.
So what's the difference between a C and an S?
Okay, so the difference between an S corporation and a C corporation is that the S corporation is known as a pass-through entity. What this means is that the profit or the loss from the entity gets passed through to the individual who is the shareholder. That's what it means. And the C corporation, it's its own entity. It's totally separated from the shareholders or the founders of the corporation, and it pays its own taxes.
And on the S, something where you get the special K.
The K1.
Uh-huh.
Yes.
And then on the C, it's just the owners have the W2.
Yes. Yeah, you just get yourself on payroll if you want to. If you participate in the business, otherwise you don't even have to be on payroll. Because there's a lot of people that, like international people, that they just come and open businesses and they don't even participate. They just open the business. But if you let's say that you live here and you open your C Corp and you're right there working, maybe if you're in the construction and you're the manager, then yes. And that's a good thing that you brought that up, because there's also something called reasonable compensation. So if you have an S corporation, you have to pay yourself as the shareholder, as the primary shareholder, reasonable compensation. What this means is, let's say I am a construction manager and I'm not going to pay myself $20,000 per year, because a construction manager is probably making, I don't know, in this era, maybe like 150 minimum, 200, something like, yeah. Any more questions?
No.
Okay. So what's new? What's new? We always have new stuff. It's fun. It's never ending. It always changes. And we will usually find out, and when I say we, I mean everyone, including taxpayers and including tax professionals, we will mostly find out what are the new items somewhere late in December or even January, unfortunately. But future events that we believe are happening, or well, one that for sure is happening is we're going to have some credits. One of the big credits that is coming up is the electronic vehicles credit, $7,000. Again, don't run and go buy a Tesla just because I'm telling you this. You need to sit down with a tax professional who knows and understands credits. Because credit doesn't mean that you're getting the 7,000. Same thing with the ERC that, it's like, oh, you got the 26,000. No, there's a lot of steps and things that you have to know. But that's one of the newest things. I'm going to buy one in 2 years, not right now, because I have a plan. Yes.
But for the company that I work for, they're trying to buy a new truck now that they want the electric vehicles. How will that work when it comes to taxes?
Is it an S corp or? Well, this credit is going to be, it is for businesses and individuals, but when it comes to S corps, I would say it's more convenient for the individual rather than the company to buy the vehicle, because S corps do not pay taxes to the IRS at all. So if you're not paying taxes, you're not getting credits, but individuals pay taxes. So Again, I think, and I told you, don't go run and buy a Tesla, because not everybody's gonna qualify, one, and the people that may qualify may not get the full credit. So you really have to plan for it. And I'm saying I'm buying one in 2 years because I know that if I buy it now, it's not convenient for me because I have small kids. So my child tax credit is going to be in up first, then I'm getting the other one. So I want to take advantage of my kids' credits first, and then when I'm ready, then I'll buy my Tesla. But if you're single, have no kids, you're paying a lot of taxes, go buy a Tesla. Maybe, maybe. Tax return due dates. So in the last 3 years, we've had a series of events that have allowed us to be a little on the slow side of filing. If hopefully, let's pray that everything, that we don't get any more storms, that everything goes smooth this winter. I don't, nobody's foreseeing any delays in filing taxes again. This year we're filing, I mean, look at the time, and we're filing till now. But make sure that you know the due dates of your tax returns. And remember, it's not just one tax return, especially for those that have partnerships or S corporations. There's multiple due dates, including your estimated tax payments due dates every trimester. Your payroll tax payments, all of those are tax payments. So taxes are with us at all times. Remember, there's only two certain things in this life: is taxes and so so who must file a tax return? Everyone who makes money. So I'll give you the secret to pay zero taxes in the United States. Don't work. Don't work. And that's something that actually a teacher of mine taught me, Mr. Carlos Lopez. That was really funny. And that's stuck with me. So if you're making money, you're paying taxes. Period. You don't want to pay taxes, just don't work. And problem solved. Okay, standard deduction. So this is for individuals specifically. The standard deduction will change this year again. It's usually going up because of the cost of life. It changes every year. So for single people, it's around 12,000. Head of household around 18,000. Married filing jointly around 25,000. And it's probably going to stay about there. It's probably going to go up by 800, at most maybe $1,000. And it's a standard deduction for the entire country, not for California. Standard deduction for California should be 100,000. But unfortunately, it's not. And then if you change your name, if you are married, if you divorced, if there was a change in your civil status, make sure to notify the IRS. And if you change your Social Security with the Social Security, make sure that you use your new name when the tax filing comes. I'm gonna check the time. Are we still, we're still good on time? Okay. Any questions so far? Okay, I think we're, yeah, Q&A. So we actually got to the questions and answers section. So please ask me questions. Any questions from the chat?
Not yet.
Yeah? Okay. No? So do you guys work at a tax office as well? Yeah? Okay. So any other questions that you may have apart from the income? I know you have questions. No? You ask for him, maybe? No?
No.
Okay, perfect. How about you? Do you have a business? No? They made you take this class for extra credit? No? No? So, do you work for some?
Future,
Oh, okay. What type of business?
clothing.
Clothing? Oh, that's great. That's profitable. Yeah. How about you, sir? You have a business, right?
Yes.
Oh, wow, you're busy. Yeah. Yeah, I know. Yeah. Well, and see, and this is a very good example of um a lot of times we work for our businesses, meaning that we're there like doing everything, cleaning and being at the cash register, doing the books. That's working for your business. But this gentleman, he's working on his business, meaning that he's working to improve the business. Same as the lady in the back, she's working to improve the business because it's very important that you understand all of these items. Because if you're just, looking at the cash register and then all of a sudden you start receiving tons of letters from EDD, IRS, CDTFA, and then all of your savings is gone. Yeah. What type of businesses do you have, if you mind me asking?
I have pharmacies.
Oh, wow. Wow. That's great.
Things go rich because prescriptions are expensive.
Yes.
Well, medication might cost us like $100. Insurance will say, okay, we're going to pay you $70. And then 6 months later, they say, oh, we're going to take another 3% off of what we already paid you.
Wow. Wow.
Yeah.
How long have you been in business?
My oldest pharmacy is about 30 years.
Yeah. That's great. So what can you tell these people that are just thinking of starting a business or that are just started a business about bookkeeping? What can you tell them about the books? Give them a good advice.
Different banks, like reference between us and CB because it makes the difference.
Yes.
There used to be a big difference in the tax rate between corporations and individuals, and now it's not as big a difference. But there's a liability protection, between C corp and S corp. If you want to sell your business later on, C corp might be beneficial to less portions of it.
Yes, definitely.
Or
yes.
So to corporations, because S corps can be partnered with a corporation, but C corps can.
Yeah. So you seem like you're very experienced, and this is a basic workshop. So I'm curious to know what brought you here, even though you knew this was basic.
Number one, it's free.
See, important. Cost.
Cost is a big, but a lot of times you can read about a lot of different articles about this and this and this, but sometimes you don't mention everything. But if you hear a presentation like, you might pick up just one or two phrase or sentence or something that makes you think, hey, actually consider this. So I try to learn as much as I can.
Oh, did you hear that? Did you hear that? That is thank you. I think you're a wise person, because see, even though he's experienced, he's been in business 30 years and still coming back to basics. So this really talks very good about you, and I admire you and respect you for being here, because there's so much that we can learn from workshops like this one, like from reading and from people like you. Thank you. Thank you for your words. How about here in this? Oh, yes.
A quick question. This is just me asking a question myself.
Yes.
So when it comes to taxes and payroll and all that, what are there any specific business entity types that are recommendable based on being in California to like minimize your taxes? And is there a difference in how much taxes you pay if your corporation's registered out of state versus in California? How does that work?
Well, for California, like I mentioned before, we are in the most expensive state. So if you're doing business in California, whether you're registered in China or in Australia or wherever you are, if you're earning money and doing business in California, you still need to pay taxes in California. So that is not something that we can save. Doing business here, you're gonna have to pay taxes here. Now, like the gentleman mentioned, I don't want to say that there's not a lot of difference. Yes, you can save taxes by planning a business structure. My favorite one, but this is just my favorite one. It doesn't mean that you should do it. You should really sit down with someone and analyze what's best for you. It's the S corporation, but only up to a certain point. Um, so the key, what I've seen, is that you really have to work with someone that helps you and guides you plan ahead of time. The one tax that I really don't like is the self-employment tax. It's 15% of your profits. So if you are grossing about, I don't know, 85, $90,000 in profit, you're already paying like $8,000 just in self-employment tax. But I do recommend this type of entity if you're just starting. If you're just starting, just stay as a sole prop for 3-4 years, and then if you decide, this is the path that I recommend. If you decide that you're going to stay as a sole prop, but you're not gonna grow more, like you're just gonna stay like that, become an LLC. And you may want to become an LLC right before you start your business if you own a house or luxury cars, or if you have money, save them but in the bank. And this is more legal, so I'm not giving you legal advice. This is more like on the legal side. You will still be taxed as a sole proprietor. But what I've seen in my years of experience is that S corporations do save you money up to a certain point. After that, C corp. So each entity will help you save money depending on where you are money-wise on your profits. But like payroll tax is gonna be the same whether you are a sole prop, S corp, C corp. It's gonna be the same. The other thing they ask me a lot is about like workers' comp. It's not a tax, but it can feel like a tax or worse. So depending on the type of industry that you are operating, if it's construction, roofing, especially is the most expensive one. So you really have to plan for all those things. Did I answer your question clearly or okay?
Yes.
Okay. Yes. Yes.
So how can we transfer a personal vehicle to a business name?
I think that's something with the DMV, but it also needs to be recorded on your books. So again, you need if you have a bookkeeper in house, that needs to be recorded on the business books as an investment. Or if you need the help of a professional, we can definitely help you with that.
And how's that going to affect the taxes once reported?
It'll most likely be depreciated, and there's different types of depreciation. So that it will depend on how your numbers look. Your tax professional can recommend you which type of depreciation to take.
And the next question is, what can an owner of an export do to avoid net income taxes? I don't know if it's a trust, insurance policy.
If there's a profit, there's going to be tax. There are other items that can be listed on the personal tax return, such as contributions to an IRA. It's one thing. There's also an additional deduction for business owners. It's called the QBI deduction, qualified business income deduction. And that's about 20% of the corporation's profit, of the S corporation's profit. C corporations do not qualify for this one, only sole proprietors, S corps, and LLCs or partnerships. So that's another one. So he or she can take advantage of that deduction. And the other thing, it's credits, like the Tesla. But depending if they have kids or not. So it depends. So that it could be a good option.
That like EV vehicle could be for business.
Well, in this case, I would recommend it for the individual. Yes.
And my last question is going back to the multiple days for the trimester. Is there a website that you recommend to better look and prepare for each trimester?
Yes, irs.gov. And just make sure it's that .gov because there's a lot of IRS websites out there and they will charge you for everything that you ask. Like, click here to ask your question. Yeah, for only $25. Another thing, if you're planning to open your business, do not pay for your EIN because those are free. But there, again, there's a lot of websites. If you're going to incorporate a business, talk to a professional because there's a lot of websites out there. And I know you have a question, too. Yes, of course. So a sole proprietorship is a business that has only one owner and is usually an individual. So it could be just you deciding that tomorrow you want to start selling sandwiches and you just make your sandwiches and you sell them to your friends. That's already a business and it's a sole proprietorship business. You're not registered with the state or nothing. You're sometimes people don't even register with the county. And that's okay. What I tell most people, you could be okay with one person or with one entity, such as the IRS, but you might be not in good condition with others, such as CDD or CDTFA or other entities. So that's a sole proprietor. It's just one person doing business as I don't know, like I don't know, hard nail sandwiches or something like that. And and you said an S corporation, right? An S corporation is an entity registered through the state of California in our case, or through the state of Idaho or any state. So you can register with your state, and then you have to file for an election to be treated as an S corporation. So here in California, if you open a corporation, and I think that's the case in any and all states, you open a corporation, you are automatically treated as a C corporation. So that's why the question that she was asking earlier, if you, you know, the due date are already passed or the time frame, there is a way to fix it, but you have to make that election. Did I answer your questions clearly? Okay, great. Any more questions?
Any other bookkeeping besides QuickBooks that anybody else's work?
Yes, that's FreshBooks Zero. That's XERO. And I believe FreshBooks is a lot cheaper than QuickBooks. But I really like QuickBooks. It has it might be a little pricey, but I think it's the best one out there. But yeah, the other two that I know of are there's another one called Wave, and that one's free, completely free. Wave, FreshBooks Zero, or you can use Excel. You can use Excel, but again, do sit with a professional, someone who knows and understands both taxes and bookkeeping, especially if you have an S corporation, because it's not just taxes and bookkeeping, it's more than that. And I don't think we'll be able to cover everything regarding S corps here, because it's basic and S corp is it's a little more complex. It's not super complex, but there's quite a few steps that you need to take in order to stay in compliance. Yes.
So how do you find out if you're an S corp or C? I mean, because I think our company started as an S corp, but then we spoke with the tax with an accountant, and he told them that we were an actual C corp. So, but
It's
I haven't done my research and actually see if we are C corp or an S corp.
well, if your tax professional told you that you are a C corp, it's possible that he or she found out at the time of filing, because we find out at the time of when someone brings us everything. Oh, we're an S corp, and then in my case, I ask for the letter of acceptance. If you don't bring me the letter of acceptance, that means that you are not an S corp, especially if it's your first or second year. Because a lot of people don't operate the first year for I don't know why, but you just don't. So if it's like your first, second year and you don't have that letter, most likely you are a C corp. And if your tax professional told you, that's because he probably tried to e-file it and it didn't go through. It gets rejected. So it's possible that it's the same, could be the same situation as her, that the election was not done on time. So that can be fixed. If they want to go, if they want to become an S corp, that's fixable. We can help you with that.
Because once we filed the taxes, I mean, we never got a schedule K1. And we didn't find out until we wanted to get a note. And that lady asked us for the K1. Our taxes, so I'm going to do that to you. But now, like you said, if my tax professional is like, she filed it under a C corp, it's because we're a C corp. Yeah.
And is that what the company wants to be, or they want to be a C corp? Oh, okay, okay. Oh, yeah. Yeah, if they don't want to change, they can just stay like that. But if for some reason they want to change, because you can change your entity status only once every 5 years. You can be an S corp this year, and then next year you're a C corp, and then you're a sole next year. I mean, you could, but it's very, very, very complicated, and you'd have to be like closing and opening entities. But if there's a reason that you want to switch back to a C corp once you're an S corp, yes, you can do it, but it's only once every 5 years. So on your 6th year, you can do it.
And if you're social family, can you have a program?
Yes. 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 Yes, definitely. And in fact, it's not an election. I think we're going to have another workshop about that. So I think you should come. That one's going to be controversial. We're gonna have 2 teams here fighting. I'm just kidding. No, no, but that one is usually it's fun. It's controversial.
Which one is that?
Employee versus contractor. Yes.
Change from S corp to C corp or vice versa. Does your tax ID change?
No. No, only your status. You get a letter saying, okay, as of this year, you'll be treated as C corp or an S corp. And then you have to stay with that. I'm talking to you. Okay. And then it'll stay like that for 5 or 6 years, or until you want to change it again. You could stay like that 20 years. Yeah. Yes.
The entity, as in like an LLC name or S corp name?
Yes. Yes.
Is there a deadline for the entity to be submitted?
No. No, it can be submitted any time of the year.
Be considered as a small business, they don't have to choose LLC or S corp.
No. Yeah. Okay, well, thank you very much. It looks like this is the end. They're finishing me up here. No, thank you so much. Thank you. We'll be in the back. Yes.
All right. Well, thank you very much, Tanya, for the great and interesting informational presentation. So on behalf of the Monterey County Business Council, this is our entire team. We thank you for joining us today. You will all receive a PDF version of all the presentation slides today, along with today's workshop recording tomorrow. So please give us some time to upload it to our YouTube channel. You'll get the link to rewatch this workshop. And again, the slides. If you guys have any questions, you can contact our team. Here's all of our contact information.